Tesla stock is skyrocketing, hitting $444 yesterday, and now we have even more big whale investors and institutional analysts become uber-bullish. Shareholders can now vote for the upcoming Tesla shareholder meeting, so keep an eye out for an email from your broker. We'll show you all the details on how to do that. First, we have Mizuno raising their Tesla target to $450 from $375 and an outperform rating, despite trimming their auto delivery forecast for next year. Second, UBS sees higher Q3 deliveries, forecasting 475,000 units. Third, while many analysts seem to still use the auto deliveries as an excuse to raise targets, others like Piper Sandler are now seeing Tesla as a physical AI company. We reported on Piper Sandler's raise to $500 yesterday, but today we'll go over their detailed note outlining the upcoming key catalysts and their responses to Tesla bears. We've got Joe Bakhti here with us today. He's an economist and tech entrepreneur. He has a YouTube channel covering both Tesla and AGI. Check out his website and community at pioneerlands.net. Welcome, Joe.
Good to be back.
So I'm very curious what your thinking is in terms of what's going to happen with this stock. You have been predicting a potential, slowdown in September and maybe October. Are you still thinking that way?
Well, I had a lot of discussions on X, so let's be clear. I said there's a 50% chance in my mind that we see a correction in the next 8 weeks starting in September. So I would reduce that probability at this point. And it's important to understand probabilities. It doesn't mean I predict that it happens if I say 50%. It means there's a highly elevated chance that there is a correction in the market. And then there's an extremely high chance that Tesla would go down with the market with a beta of 2. This is where I'm very confident, because a lot of people say, no, Tesla is so bullish. If the NASDAQ corrects 10%, Tesla's not going to drop. It's like, no, I can guarantee you Tesla's going to drop 20% if the NASDAQ drops 10. Because when these things happen, no one cares about anything. It happens quickly and people panic and they sell all their shares according to NASDAQ. So the big question is, will it happen or not? I said 50% chance. I would reduce it to 25% now, because it was pending a lot on the Fed reaction. If the Fed would have said anything wavery about the economy, I think the market would have been ready to drop, but they navigated it well. And so the market doesn't seem to react too badly to the Fed. I would just still wait until next week. But I think seasonally, there's always risk. And when things look up, like today, they're looking a little wavery, but when things look up, people are all bullish. But don't forget, this is the market. Of course, there will be a retracement at some point. The point might be very soon. Now, does that mean I'm bearish on Tesla? That's another thing. Obviously not. I have very aggressive price targets, even for the end of this year. And, if you are a normal Tesla shareholder, just in shares, if you hold anything less than 100% Tesla, up to 100%, I don't think it's smart to do too much, right? Because I'm very bullish that this thing goes up. But if you're more than 100%, if you have leverage, if you have a lot of leap call options that give you exposure beyond, a 1-to-1 with 100% Tesla, I think it's very smart, if not imperative, to do some fading in and out around the margins. And I did that. I think I did very successfully this year, where I basically, when it dropped a lot, I rolled stocks over into leaps to have much more leverage, and that turned out pretty good. But of course, on the way down, that's very bad, right? So any time, so we have to stop thinking just in binaries. Oh, sell all Tesla or buy all Tesla. That's dumb, right? You never sell all Tesla, at least not me. I don't even sell, over 20% of all Tesla. But on the margins, if you are that exposed, scaling back 10%, which is what I did, by the way, beginning of September, of my short-term calls, expiring in December, strike price 400, I think they are at super high risk, right? Because they were at 80 premium or something. So I need Tesla to go to 480 by end of the year, which I think they totally will. But if Tesla would drop back to 400 even, it would be devastating for these calls, because they're relatively short term. They would get destroyed. So any kind of retracement below 440 over the next 2 months would have turned out to be a very good trade for me if I did that. So that's why I'm thinking about these tactical retracements. And as I said, if you're not very exposed and some call options, you shouldn't even listen to that. But if you are, I think it's very, very productive and profitable to think about these things. And right now I'm in waiting pattern. I did some analysis. I published on Twitter, by the way, some very empirical analysis. Probabilistically, we had a run up of 30% over 10 days. What are the odds that in the next 20 days, the stock goes lower than it is now? And the odds are actually not very high. The odds are higher, it's going to end up higher.
Really?
So I did some analysis on this, very interesting. If we go up another, 5% to 460, then the odds turn negative. And of course, it's just minor, like from plus 3% median to negative 3.5% or something. But it's an important signal. So that's how I think around it. So if we go a little higher from here, or if I see wavering in the market, I would scale back a little bit more. But for now, I'm standing still. That's my message.
I like that you share your probabilities. That's the key thing, right? Not to think about something is gonna happen, not gonna happen. It's more like here's the probabilities, and you share that. I appreciate that very much.
It's funny on Twitter. I think most people actually get it, but you know how it is. You listen mostly to the people who say dumb stuff, not all the ones who just like something. And it's very important that people understand, if you're doing trading a little bit more professionally or investing and then trading around the margins, everything are just probability layers. It's like Bayesian math. You can't just say, oh, this is going to happen or this is going to happen. And people said, oh, 50-50, you say 50% market correction in the next 8 weeks. This is basically saying nothing. It's like, dudes, that's not saying nothing. That's the opposite of it. That's a very clear and bold probability, because normally you don't have a 50% chance of a correction in 8 weeks. So
that's your point. Yep.
And you can be right and wrong about these things, but not in one-off predictions. You can make, if I say this 6 times with my probabilities, then you can start judging them. But if I say it once, you can say, oh, you were wrong, Joe. You said 50-50, but it didn't happen. It's not how it works. So thinking in these probabilities is very important, and layered in your mind what these probabilities are, and then start trading accordingly and learn to have a high conviction in these probabilities.
Okay. Thank you so much, Joe, for that. We'll get to the big whale investors. They are now bumping up the price target significantly, not only $100, $75 high. We'll go through UBS and Mizuno and Piper Sandler. But before we do that, I think it's important for people to know that you can now vote. The upcoming annual shareholder meeting is on November 6th, but as of yesterday, your brokers and today, they're starting to send you emails if you own Tesla shares, and you can now vote. So look out for those control number. You'll get one control number for every account that you have any Tesla shares in, and for each of those, go in and you can vote now. And if you don't know how to vote, I'll give you the details here just shortly. And you can visit Alexander Mertz, Tesla Boomer Mama on X. Then you can find out those instructions on how to vote.
But it's important. Yeah, just want to add, it's important that these are actually the recommendations by the Tesla board, because I didn't read every single little thing. I'm just following the recommendations of the board. And
well, the board, what I'm showing you is a table that Alexander Mertz put together, and this is what she's going to vote. But the board, basically, she's following the recommendation of the board, Tesla board, except for, I think, number 6 and 7, where the board kind of did not give a recommendation. They're letting the shareholders decide on their own. So for 6 and 7, she's giving you what she thinks are the right answers. But you can do your own analysis, and she helpfully gives you the proxy page number and the PDF page numbers. You can take a look and learn more of how to vote for this. But basically, yes, re-elect the board members for 3 years. Of course, the executive compensation. Of course, the 2025 CEO Performance Award. That's the most important one here. Executive compensation and amended, those are just bumping up the stock options available they can reward the employees. PwC as accounting firm. And then here, we don't want to have a supermajority be eliminated for certain proposals. So be against that. And then you can decide if you think that Tesla should have the authorization to invest in XA or not. Not that they're going to, if this is a for. This is give the authorization for them to do it. I'm going to vote for it. So is Alexander. You can decide on your own. And the rest is against. The good news that I want to point out is that because Tesla moved headquarters to Texas, it's now 50% of votes casted plus 1. These are good news because this makes it easier for these things to pass, especially Elon's CEO Performance Award. And then the other good news is that both Elon and Kimball can vote for these, again, because it's Texas corporate law, not Delaware. So this is all very good. Okay. And then just very quickly, I'm not going to spend time here, but you can pause the video if you want to see the instructions on how to vote at Fidelity, how to vote at Robinhood, Interactive Brokers, Charles Schwab, Morgan Stanley and E-Trade, Merrill Lynch, Vanguard, and JP Morgan, and then all other brokerages. But they're basically the same. You should receive an email and you should have a check your spam folder. And for each of those, you can click in and you can use your broker and they will help you vote. And then if you can't, then you can go to these websites here and then you can try to, or look for these emails to find your email on how to do that. All right.
And just to reiterate, voting is important because the votes, I always follow the board recommendations because I trust Elon. And in Tesla's case, the board is highly coordinated with Elon. So you don't have to read all these things. I think Alexandra does the best job in just making clear what the right vote is. And it is important to vote because all of these things matter a lot. Like if any of these things go wrong, it means trouble for Tesla. Not existential trouble, with the exception of the executive package. Of course, that has to pass. But even these minor, stupid little things that people bring in where we have to vote against, right? If they go through for some reason, and some of them are ESG and some very stupid things that some of the large shareholders might be voting for because it's what they do. So it's important that everyone votes. You know, if you like your investments, you want to have Elon be able to do what he has to do. And any vote that deviates from that makes his life harder. And that's the last thing we want.
And there's also potential for activist shareholders to come in and control and try to figure out how to, disrupt Tesla. So we've got to be very careful for that. So by the way, just to complete it, here's what instructions are for international Tesla holders. So pause the video here and read this. And then general info. If you can't locate the emails, you can vote by mail, phone, or QR code. Here's the info. Okay, so let's get started to Mizuho. We covered yesterday a number of I think it was Baird and Piper Sandler. They both just raised it to over $500. I think Baird is now the highest target, but Mizuho also. So they're all following suit here. They raised their Tesla target to $450 from $375. Again, remember how we kept seeing them always like, we're reducing it by $10 or $5, raising it $10. No, we're seeing huge jumps at this point. And then outperform rating. And then these guys still talk very much about Tesla as a car company. And interestingly, despite them trimming their 2026 delivery forecast to 1.91 million units instead of 1.95, they still think, this is, despite the car market, they still think that this is going to go up and higher. So that's Mizuho.
I mean, it's just, can you go back for a second? I just have to rip on these people. So, I mean, here's how dumb this game is. Why you should never listen to these analysts, with the exception of Dan Ives, who's a little bit ahead on Adam Jonas, who does sometimes cool stuff. The others have no clue. Like, really, you're raising from 375 for $1 trillion market cap company to 450. So that's like 100 billion plus valuation because you think they improved deliveries from 1.91 million to 1.95 million. That's worth $200 billion.
That's the other way around. They trimmed it. They actually lowered it from 1.95 to 1.91.
Yeah,
but despite that,
it's like it makes zero sense. And what's actually happening, Dan Ives nailed it. He said, if you miss as a money manager, these are not money managers, but they work for money managers. If you're a money manager, you miss the run up to 610, 700, you should lose your job. That's what Dan Ives says. And similar things, not as stark, but similar things are true for the analysts, right? If you just sit there and have your $200 price target, right, Tesla goes to 1,000, you're just looking like a complete moron. And that's the reason they are raising in a trailing way. They're waiting, the stock is up, we should raise now. So they are total sentiment followers and have no clue. It's very sad.
It's because the stock went up. That's what happened to their sentiment. As
Exactly, which
opposed
is the
to
opposite of what you should do
the
as an analyst.
proper thing that analysts should do is do discounted cash flow, do probabilities of different business units, where you think it's going to be 5-10 years from now, and then bring it back down. And if you don't do that and you're just jumping around based on, oh, the Q3 numbers are up, oh, the, you know,
Well, we think they are going down. That's why we are raising the price, because the stock is up.
it's crazy. Here's UBS. They don't. I actually don't have their price targets. I looked for it, couldn't see it. And then there's two analysts at UBS. One is an absolute bear, $200 still. But this guy here, they raised. They're now saying that they sent a note to their clients. They've lifted their forecast to 475 cars delivered by the end of this quarter. That's in line, higher than most are saying. The estimate is still 431, or it was 431. That was the consensus from analysts, and I'm sure that as we get closer to the end of this month, this will keep going up. So that's UBS. They're just, again, I think that they're still talking about Tesla as a car company, and that's how they view it.
Yeah, I mean, it's also a problem still. Dan tries to break out of this matrix, and Adam Jonas of Morgan Stanley tries to break out of the matrix. They're not doing an amazing job, but at least they're trying. ARK already broke out of the matrix, but everyone else is stuck in the matrix. And the matrix means on Wall Street, backwards looking analysis. You're looking what people did, their cash flow, and how they're growing, which is dumb in the age of AGI. Because most things that are important will happen in the future and didn't happen in the past. So if you do this, you just lose completely out. The way you have to analyze businesses in the age of AGI is you have to predict the future based on first principles, match the companies to these first principles, listen to great leaders like Jensen Huang or Sam Altman. I don't want to trigger people, but he's also not a dummy. Zuckerberg's not a dummy. And of course, Elon Musk. You have to listen to them. It's like, does that match with my predictions of reality? Is it reasonable that Optimus is coming? Is it reasonable autonomy is coming? Then you model out these things with cash flows. Or you listen to people who did that and compare their models. And then you do discounted cash flows, and then you derive your share price. And Wall Street is never doing that. The only people who did that was ARK, and ARK was right the last time. I think they're kind of right this time, even though they're not modeling out Optimus. Yeah. The other people simply don't do that. Like they simply don't do the basics of what you need to do to predict the share price. That's why they're confused.
I think you made a very good point. In the age of AGI, where we are today, you can't be acting like you were 5-10 years ago. Things are moving fast. You do have to predict the future. You can't sit here because nothing's slow anymore. Big moves happen. That's a very good point. So I reported yesterday on Piper Sandler with Jeff Lutz. Alex Potter raised his Tesla price target to $500 from $400. And these jumps are huge, $100 jumps. But Elon responded to him. And then I wanted to go through the note because there were some very good paragraphs that they talked about on catalysts and how they respond to bears. And then we didn't cover that yesterday, so I want to do that today. So first, Elon responded to this post. He increased his price target to $500 following a trip to China. After meeting with Chinese EV makers, we can see why Elon respects these fast followers so much. Vertically integrated Chinese OEMs may be Tesla's number one competitive threat. But when it comes to real-world AI, these companies look to Tesla for guidance, not the other way around. Alex added, we think the catalyst path matters more to the valuation than 2026 estimates. Thank you. Finally, it now seems FSD version 14 will be released any day. We think this will prompt a higher multiple. Elon responded to that saying China has many excellent companies and many industries. Okay, nothing, doesn't really say much. And then we'll go through this. We covered this conclusions yesterday. It's basically the same stuff we're talking about, but here I want to go through the possible catalysts. Okay. So let's go through them one by one. FSD and Optimus-related catalysts are likely to overwhelm all other considerations. New cities offering robotaxi services, an expanded robotaxi service area in Austin or Bay Area, the release of FSD version 14, the removal of safety operators in Austin, or other cities. Tesla announcing that it officially supports eyes off FSD, not likely within 6 months. Unveiling the third gen Optimus bot, updated targets for Optimus production, Optimus deployments for specific tasks, the first purchase orders. Wow, that's a lot. That's possible that could happen. Yeah. Thoughts on any of
Well,
that?
they also say the removal of safety operators in Austin or other cities, not likely within 6 months. So that contradicts what I'm saying.
Yeah.
Let's see. I think it's very likely.
Yeah. I mean, all of this is absolutely true, right? I mean, the expanded robotaxi service in Austin and Bay Area, that's almost guaranteed. We actually have a sighting of the actual cars being tested in other parts of Austin and then new cities, right? We got Arizona, and Nevada,
Yeah.
right? Those two are been approved already too.
It's huge, yeah.
Okay, at some point, we think Tesla will change financial disclosures to reveal FSD details. This ranks among the most exciting possible catalysts, and relatively few people are talking about it. Tesla would reveal revenue and gross profit from FSD, just like it does with energy service. We would also be on the lookout for other KPIs, size of FSD-equipped vehicle fleet, FSD take rates. Once Tesla changes disclosures, it enables investors to build models based on new revenue streams. This could be an aha moment that shifts the narrative away from just car deliveries, automotive gross margin. Investor Relations has said that Tesla will change disclosures as soon as these metrics become signal, not noise. So this is great. Let's talk about that one, because you have also said, right, that there's for you, we've talked how many times now? And every time we have a talk, I ask you, update me on when do you think that, robotaxi becomes a forcing function that Tesla stock must go up? And this is possibly one, do you think?
I mean, here's the interesting thing about this. All the things they're saying are right and correct, only that we said them like 9 months ago. So that's great. So nothing new here, obvious stuff. But what is important, even though I'm a big fan of Herbert and of course a big fan of Joe and our channels, Piper Sandler still has more weight with investors, with institutions. And why is this important? Of course, they don't know more than we do, but they're Piper Sandler. And the fact that they're reiterating our points here is important because it tells us that the market is primed, completely primed for what's going to happen. That is different from 2020 and Model 3. Because back then, I was super bullish. I was fully invested in Tesla. I made a lot of money, but Wall Street was behind. So what does it mean? The forcing function in 2020 was Model 3 scaling. So it was in your face. It was like NVIDIA. If you were an investor, you had to buy Tesla because there was a cash flood coming in and drowning you. You had to just buy the stock because it's a PE thing. Now the situation is a little different because I'm saying the hard catalyst is probably starting in May next year when the 5% free cash flow threshold might be hit by robotaxi. Maybe we get delayed a little bit, who knows? But the odds that Wall Street is going to wait for that moment to be forced to buy it are extremely low because they're too primed. And that makes our strategy a little more complex because we know they're not going to wait until they hit the wall like last time and then are forced up with a forcing function. They know what we are saying. They know we are talking about the forcing function. They can project it's coming. Yeah. So they will react before. And that makes the whole game a little more complex because that means instead of staying flat and hitting a wall and going 5x, we are going to do something different this time. We are going to creep up somehow, towards that wall. And that makes it a little bit harder to predict what happens because it will creep up. There will be more confidence in the stock price. They will look probably to us for the real modeling because they have to. But the retracements will be unclear, right? If they get jittery and we are not there yet with the forcing function, the price can always drop because it's not supported by actual cash flow. So that's the next 6 to 9 months. It's going to be tricky because this time the information has leaked on a massive scale to institutions, which makes it exciting. So that's how I see the difference to back then. They know more. They're more aware of what we are saying. They're saying the same thing. And if Piper Sandler writes something like this in Morgan Stanley, Dan Ives, all the funds are aware of it. So interesting times.
Yeah. When do you think that they might actually start revealing FSD metrics as part of the quarterly financial disclosures?
That's very hard to tell. Like they definitely need more volume
Yeah.
They need more experience with pricing. So I don't think that's going to happen too soon.
I don't think it's going to happen this
But
year.
it could also be not a black or white moment, right? They can start just talking even this earnings, they could start saying something like, oh, we have looking good with the bookings or whatever, or the average ride length is actually 10 minutes, whatever. So they might start leaking important KPIs.
Okay.
But they will definitely not, I don't think this quarter or next quarter, maybe not even the quarter after, are going to reveal the full KPIs. I don't think so.
Other catalyst that these guys point out is November vote could be a huge catalyst. Now, if it is in favor of Tesla, we will find out on November 6th. And that shows you that Elon is on path to the 25% ownership. And then the launch of the new Model 2. It's not the number one driver of our long-term thesis, but nonetheless, people are looking forward to this unveiling. Selling the car will obviously generate revenue, but more critically, Model 2 will boost the size of the FSD fleet. One thing is definitely true. When it comes to 2026 estimate, this is the biggest area of uncertainty. So depending on how this comes out and how analysts view it, if it's just a strip down, people won't get excited. But if it's something that compacts, they'll get very excited. On the negative side, a high-profile robotaxi accident or fatality could be very negative. Also on the negative side, free cash flow could turn negative in fourth quarter. I don't think so because of energy. But
I think, I mean, the affordable model is one of these interesting things where I think more and more I have an alpha edge. Because I'm very clear in my predictions. And at this point on X, I'm an outlier. Most people are not clear on it. Most people say, ooh, it's going to not happen. So I gravitate towards making a clear prediction, which is always very dangerous, but that they will launch this thing beginning of October. Means now. Because I think it will be a stripped down Model Y. I do not agree that this is in line with expectations, even though it is in line with expectations. But what he means is it's a non-event. I don't agree with that. I think it's in line with expectations, but it's not a non-event because the key here is if the price is 32,000 around there, below 33, that hits this inflection point of demand.
So for you, even if it's a stripped down Model Y, it doesn't matter. You still think as long as the price is low, TAM's going to be good. You'll still give it a good shot.
Exactly, because we looked at the chart. Like the point is, this is not a Ferrari. This is not a high interest object. It's going into a market where price is the only thing that counts.
Yeah.
Right. Yeah. Why is this demand going high? Not because all the cars are suddenly so exciting once they're cheaper than 33. The opposite. They're less exciting, but they are now in the reach of affordability for vast amounts of people, for 5 times more people than before. So it's a 5x expansion of demand, which is crazy. So I think it is not a non-event if they hit that price point.
It's the price. Yeah, that's a good point. That's a very good.
And Herbert, very important. Most people think now, because Elon has said launching Q3 in July, then nothing happens. No one said anything, no reveal. Now everyone's frustrated. Now everyone thinks Tesla's late. But this is one of the easiest launches in Tesla history. It's like, okay, strip the stuff out of the Model Y. How hard can it be? Change the front fast share a little bit. So I have just on first principle reasoning what's happening. I have a high conviction that Tesla kept the schedule, was ready to launch it in Q3. Yes. Of course, decided not to do it because it's an obvious no-brainer. Do not talk about this thing and do not launch it while you're squeezing out the tax credits all the way to midnight towards October 1st. You don't want to talk about this at all. And once the tax credit is gone, you want to go all out on this thing, which at this point becomes like a surprise because people got delusional about it. So I think it's actually very likely that in the first week of October, they're just going to launch it. And if this happens and the price is actually low, I don't know that, but that could offset all these problems. And then we have a good quarter plus energy. So yeah. I think it could be I think we could look at a much more bullish situation by the earnings call, because that would all accumulate then. So if the market keeps stable, which is like the risk here, I don't know what the market's going to do. I'm skeptical of the market, not hard skeptical, but it's totally a possibility that this thing crashes a little bit. I would be cautious. But if not, I think on a pure Tesla level, I think the first 2 weeks of October are very, very bullish, potentially. And not just bullish, they are surprise bullish because people don't really factor that in. It's not about bullish or not, it's about alpha. Do we know something that most people would think is not true?
I think you're right. There are several things I can point to that makes it more likely that things you just said now is true. So, of course, yesterday, Jeff and I covered software code that are showing a whole long list of deconted Model Y.
Yeah. I don't understand it fully what that means, but I saw it. Like, why is it in the software code?
Well, that's what Jeff was saying too. Why would, he doesn't fully trust that information would have shown up in a software code. But it does make sense that all these things would be stripped out. And then, how many times have we had these Tesla executives come out and repeating that it's about the monthly payment and they're really going to reduce the monthly payment. Jeff Lutz is not yet calculating how much of those stripped down is going to be able to bring down. He doesn't think it's going to be $5,000. So, but you're right. They could surprise us. If it's 32 or less, it doesn't matter that it's a strip down. This thing's going to take off, right?
And there's also Jeff, of course, looks at it from a pure engineering cost perspective, but there's also tactics in there, right? If you strip 5K out of 4.5K, would Tesla be willing to also give in on margin? 2,000?
Yeah,
because
he's already saying that too.
Terms, and because
you lose the 7.5, right? You lose the 7,500, and so you got to make that up somehow. And so I think most of us are thinking that they'll make it up by the 2,005, half of that, and then the rest is this. But still, I think they can bring it down even more. I think they will. We'll see. Okay, and then just final things I just want to cover here is it was interesting that the note that Piper Sandler dropped actually included their rebuttal to Tesla bears. Elon Musk's behavior has negatively impacted Tesla brand. Shouldn't this be a concern? We agree that Elon's behavior has negatively impacted demand. Sales are falling by double-digit percentage in Western Europe. It would be naive that politics played no role. We would be more troubled if Tesla weren't pursuing new AI opportunities. So that's really I guess that counters that. So far, Elon's FSD timing predictions have been accurate roughly 0% of the time. Why do people keep falling for this? This is fair criticism, but guess what? We've been testing it ourselves, right? That's the key thing. Something must be wrong with Tesla's outlook. Why else would executives keep leaving? That's ridiculous. And we've covered that already. There's so many people. The average tenure is over 9 years at Tesla's executive. It's ridiculous. Anyways, just thought it was interesting that they actually included that.
Yeah, it's all very interesting because we have to understand this is not normal that people cover a stock like this. If you go to whatever, I don't even know, Tempest Genomics or something, no one talks about these things. This is not stuff people normally talk about. So the coverage on Tesla is insanely high resolution. And they're covering all that stuff similar to us, basically. I'm sure they're watching all the YouTube channels too. And so it's very interesting that there's such a high interest stock and that Piper Sandler is they're all turning into advocates because you have to. Because if you're not, you will, as Dan Ives said, he nailed it. You will look like a moron and lose your job. And you don't want that. So they have to play along. So it's a very interesting dynamic.
I don't know. I think we have a number of morons who have been predicting Tesla $25 or Tesla 200 for years.
But they're right now on the defensive, right? It's clearly that more and more people turn bullish and, defend it, even in front of their investors, like Piper Sandler.
Yeah. Thank you so much. Lots of signal with you today. Thank you, Joe. Follow him on his X account at Joe Bhakdi, and then check out his website, pioneerlands.net. It is the age of AGI, and that's what he covers. If you want to predict the future, you got to understand AGI and what's going on. Thanks, Joe. Thanks. Bye-bye.
Thank you.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.